Welcome back to the Market Matrix, and today we're going to be speaking about candles. Yes, we already spoke about candles, but now we're going to speak about different types of candlesticks and what they mean. So when we initially spoke about candles, what we spoke about is the anatomy. We spoke about the wicks and the bodies. We spoke about how if we see a green candle, we know that the opening price is on the bottom and the closing price is on the top, and the wicks just mean that the price reached these levels before the candle closed, but after it opened. Now with the red candle, we spoke about how it opens at the top and it closes at the bottom. And again, wicks, same thing. It's just the range outside of the opening and closing price range of the candle. So when you're trading, you might see all sorts of candles. Some have long wicks, some have short wicks, like this one. Long wick on the bottom, and this over here. This one barely has a body. This one has no body at all. And what this means is that the opening and closing price was the same. But let's get into it and we'll explain it as we go. So these candles have different names. So over here we have this candle which is called the Marubozu candle. And this is a word in Japanese which means dominance. And you'll be able to understand why it's called this in a second. So this is a bullish candle. And by the way, we are speaking about this big green candle we see over here. This is a bullish sign. It is aggressive buying. If you look at it, the buyers stepped in over here and they were still in control all the way up here. So this price opened here and closed here. There's no wicks. Sometimes with this candle, you will see very small wicks. So the Marubozu candle, again, Marubozu meaning dominance. And you could see why it's called that, because the bulls are dominant in this case. They managed to buy over here, hold the price all the way over here within the time frame of this candle. So for example, if this is an hour, if this candle signifies an hour of trading, within this hour, the bulls stayed in control. The price managed to open over here. The bulls bought it up. And that whole hour, basically bulls were buying. And it closed all the way at the top. So this is a bullish candle. It shows aggressive buying. Again, small, little or no wicks. So you might have a wick like this or a wick like this. Very small or none at all. And this can be a trend reversal or a continuation candle. What does that mean is, okay, this is coming from a downtrend. In this case, we have it drawn out. It's coming from a downtrend. And then you see this massive buying over here. So this one candle over here was enough to basically bring the price back up here, which in this case, this price came down all the way down here within three candles. So again, let's say this is each one of these signifies an hour of trading. 1, 2, 3 hours, the bears pushed the price down all the way over here. Within 1 hour, the bulls were able to take control and send the price back all the way up to here. So again, this is how you know it is aggressive buying. Now this is how it can be a reversal. If the stock is coming down and the buyers just step in and this thing just starts skyrocketing and going up and aggressive buying, we see this massive candle. This can be a trend reversal, meaning the trend was down at first and now it's starting to reverse, and maybe this thing continues to go up and keeps going. Now, how can this be a continuation pattern is, let's say we have something like this, small candles going up, and then you see this big green candle come in. This shows that buyers are still in control. This shows, okay, the buyers were here, the buyers were here, the buyers were here, and then you see, boom, this big green candle. Buyers are still in control, and you can see that clearly through the chart. So that's the bullish Marubozu candle. Now let's talk about the bearish Marubozu candle. It is the same thing except, well, it's just the opposite. This is bearish. So it shows aggressive selling. Buyers were buying, buyers were buying, buyers were buying. Sellers stepped in over here and managed within this whole time frame of this candle to keep the selling pressure high until the candle closed down here. And you could see sellers came in over here and didn't stop until the candle closed, meaning this whole, if this is a daily candle, for example, this whole day the sellers were just sending the stock lower. They were just selling. The buyers, maybe it opened over here and then it came here and then the buyers tried to step in. The sellers came in, buyers tried to step in. But what we know is that selling started over here and stopped over here within the whole day of price action. And again, this is going to have little to no wicks. So you might see something like this or this, or you might see something right here as it is with no wicks at all. And it can be a trend reversal or a continuation. Again, we see over here, the stock is trending up. That's the trend. Boom, sellers come in hard. Sellers are aggressive here. This might reverse the trend and the trend might start trending lower at this point. This can also be a continuation. Let's say, for example, we got some candles going down, Some candles going down, pretty small candles, nothing crazy. And then boom, you see a big red candle. This shows you that the sellers are still in control and that this downside momentum might still continue. So this downside might still have more steam to it. So that is the bearish Mariposa candle. Now, we're going to see this in certain candlestick formations, which we'll speak about in different videos. And that'll maybe help you see where you might see these candles. Over here, we have a hammer candle. And why it's called that is, well, because it looks like a hammer. It has this long wick over here, and then it has the body like this. It looks very similar to the hammer. This could be the wick, and then the body might look something like this. So the hammer can be bullish or bearish. Now, this depends on where it is. Now, let's say, well, first, let's look at the anatomy. It has a long lower wick, and there might be a small wick at the top, or maybe there's none. But you need to know there's a long lower wick, and then there's a small body right up here. And that gives it the hammer look. Now, this can be a bullish or bearish candle, depending where it is. Let's say the stock is coming, it's going up, it's going up, it's going up. And then you see something like this. The sellers tried to send the price lower. The buyers were here. The sellers tried to step in. So you see that there is some selling interest. But the buyers stepped in and eventually managed to close the price all the way up here. Now, what does this wick show us? This wick shows us that there was some selling interest. Sellers tried to take control. So maybe these sellers didn't leave. These sellers came in. Okay, the buyers took a little bit more control over here. They managed to send the price back up and disregarded all this selling pressure. But these sellers might stick around. They might say, okay, let's try it again. Maybe a couple candles later, you might see the sellers trying it again until they eventually send it lower, or the buyers eventually take control and this thing keeps going up. So let's say a stock is going up, and then you see this. This should make you aware that some sellers are here. So what can happen is, again, certain candlestick formations consist of this pattern and will show a price reversal to the downside, which we'll get into in one of the next videos. So that is the bearish case for this. If the stock is running up and then you see this, and then the sellers step in, but they can't take control, but then they step in again and they eventually take control. Now, same thing could happen. It could be running up, and then you could see this form. The sellers tried to step in, but the bulls were strong enough to keep this thing up, and then this thing keeps going up. Another way where you can see this is, let's say a stock is going down, and then you see this happening. It opened over here. Sellers tried to send it lower, which they did, but then the buyers stepped in to eventually close it like this. So you see selling, selling, selling. Buyers stepped in over here. Selling came in strong, but the buyers came right back in and said, no, we don't want the price to go below here. We're going to keep buying. So they bought it up, holding the price over here. And what happens a lot of times after you see this is this thing will reverse higher. Now let's look at this. It's the same concept, except this one is red. Now remember the anatomy of the candle. Over here, we had it open over here and close over here. So the buyers had slightly an upper hand over here. They managed to, okay, the selling was in. They pushed it all the way back up over here. Now let's look at the red one. What happens over here? The price opens over here. The selling takes place, sends it all the way down here. Buyers step in for it to close over here. So yes, although it is a red candle and it closed lower than it opened, let's say this is $2 and let's say this is $1. It opened at 2 and it closed at 1. In your mind, you might think, okay, it closed at a lower price. Sellers might be in control. But you cannot forget about this wick. Because what this wick shows is that the buyers managed to push this price all the way back up here, even if it closed lower. So again, let's say this is 5. Let's say it closed at 5 and it opened at 5 and it closed at 3. This whole price range might be from 3 to 1. So these buyers stepped in and pushed it all the way back up here. This could be $4 over here of price action that the buyers managed to push it up. And this could be, let's say, $1 of price action where the sellers were only able to keep it down for X amount of time before the buyers stepped in. So you need to keep that in mind as well. So when you see a red hammer or a green hammer, you need to understand the difference. Now, again, this can come from a down move or an up move. So we could have something like this, a down move, and then this could come in, and then you see those buyers over there. Again, even though it's a red candle, this wick signifies that aggressive buying came in, not enough to push it higher than it opened, but enough to hold the stock and keep it at this level over here. So what can keep happening? What can happen is the buyers can step in again and eventually reverse the stock, which again, one of the candlestick patterns, the candlestick formations will have this candle in it, which we will get to. Now let's speak about the inverted hammer. What is this? Well, it's just the opposite of the hammer. It looks basically the same, except it's just upside down. So, for the other one, we had a long wick on the bottom and a small body on top, and a small or no wicks at the top. And this one is just the opposite. We have a long wick on the top, small or no wick on the bottom, and the small body on the bottom as well. Again, it looks like an upside down hammer. So let's look at it. The price opened over here and it closed over here. What happened in between is that all this you see over here, this wick, the price came all the way up here, but the sellers managed to come in and the price closed over here. Yes, the price did close higher than it opened, but you need to notice that this wick signifies that there were buyers interested. I mean that there were sellers interested. Because, okay, open here. Maybe it came all the way up here. Maybe at some point this was a big candle, and then the sellers came in and it closed down here. So you might see this with a continuation, meaning let's say a stock is coming down and then you see this candle. How can this be a continuation? Why would that make sense even though it's a green candle? Well, because the buyers tried to step in, but the sellers stepped in enough to suppress the price and keep it all the way down here. Therefore, this thing can continue going lower. Or this thing can reverse and go higher sometimes. And how would that be the case? Is if the sellers are in, and then you see this. Okay, although there was all this selling pressure, the buyers still managed to keep the price above where it opened. But again, all this selling pressure, you cannot forget about it. So a lot of times you might see a stock that goes like this, like this, like this. This opens up right next to the previous candle. This price rejects. Maybe this rejection over here was the breakdown. So maybe we had a stock like this, like this, like this, like this, and then this candle broke down, and all this is doing is retesting this initial breakdown. So this can continue lower, absolutely. And we have the same thing over here. We have a red version. So this red one, a lot of times you might see a candle like, you might see a red candle, and then a smaller red candle, and then a candle like this, which signifies that the buyers tried to step in, the sellers were still sort of in control enough to keep the price pressed lower. Now, a lot of times, this one is actually bearish. This will show you rejection of higher prices. So a lot of times, like the other one, you might have a stock that goes like this, and then it breaks down, and then you might see this candle right over here, press. Just like that. What does that show you? Buyers tried to step in, they sent the price all the way up here, but the sellers said, nope, we're still going to keep it lower. And this thing will potentially keep going lower. So now let's speak about the spinning top. What does this show us? Well, this shows us an indecision. And what does that mean is that, well, the buyers came in over here. Let's say it's a very tight range. So the body is going to be really small. So let's say this is $7 and this is $7.05, for example. But this is, let's say, $8 and this is $6. This means the price opened here. Buyers tried to send it here. Sellers tried to send it here. But the price closed not far from where it opened. What this shows us a lot of times is a potential reversal coming. Again, this is an indecision candle, meaning it's not decided. The bulls aren't in control. The bears really aren't in control. But depending where you see this candle can signify a reversal. So let's say we have a stock that's coming down like this, where you could clearly see sellers are in control over here. This is trending lower, trending lower, trending lower. It's constantly trending low. And then there's an indecision over here. So a lot of times, just think about it psychologically. Think about it. If this is going down, and then there's a fight, now the bulls might step in to send it up. Because at this point, the bears were in control, sellers were in control. Now the buyers are trying to fight it out, so this can signify a reversal over here, and this thing can go up. Or this thing is going down, going down, going down. Buyers and sellers are fighting it out. Sellers can stay in control and keep this thing going lower. So depending where you see this, this can signify a reversal, so it's good to pay attention when you see this. Maybe this might be the bottom of this trend, and this thing can reverse and go that way. A lot of times you might see that. You'll see a big red candle, and then you might see this, and then you might see a candle like this, and this thing reverses and going higher. You also might see this where at the top of a trend. So let's say something's going up, going up, going up, going up. And yes, although this is green, the price closed higher than it opened, you need to see that the sellers had some interest. They managed to suppress the price back down here. They managed to send the price all the way down here. Buyers tried to step in over here, but sellers said, no, we're sending it here, we're sending it here, even though the buyers made it close over here. Now let's look at the other spinning top. It's a red one. What does it signify? The candle opened up over here, it went all the way up here, came all the way down here, and it closed somewhere over here. So yes, the price closed lower than it opened, but that doesn't necessarily mean that this is a bearish candle. Again, this is an indecision candle. The direction isn't really decided. The buyers and sellers are fighting it out at this point. So let's say a stock is trending lower, and then you see this. Yes, it is a red candle, like we just explained, but this can signify a reversal. Buyers show some interest over here. Over here, this thing was just trending lower, 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 lower. Bulls decided to step in and say, okay, let's try to send the price higher. Will it reverse? We don't know yet. We have to see what happens next. In this case, we have to see what happens next. Some aggressive traders will enter if they see a candle open over here, for example, because they will assume that, okay, buyer stepped in. And they'll have maybe a stop over here or something. But it's good to know that this is an indecision candle. So anything can happen once you see this. Especially after you see a downtrend, okay, and then you see this, okay, let's see what happens. Maybe this thing reverses and goes higher. Maybe, okay, the sellers stop selling as aggressive, the buyers try to step in, and this thing continues lower. So it's good to know that it's indecision. Now we have these candles. Now we have green candles, we see red candles, but what happens when we see a white or gray candle? Well, what this means is it's also an indecision candle, but the opening and closing price will be the same. So the price opened at 2, the price closed at 2. The price opened over here, it closed at the same exact spot, the same exact price. So yes, let's say it opened at 2, it came all the way to 4, went all the way down to 1, but it came back and closed at 2. At this point, you really can't know which side is more aggressive. But what you can take a look at is the wicks, and that'll give you sort of an idea. So over here, it opened at this price. If you see this long wick and this small wick, how would you know who is more aggressive? Because the price opened and closed at the same price. Okay, buyers stepped in and sent it all the way over here. They were aggressive. Okay, cool. But the sellers came in and sent it way back down. And sent it even lower. So this candle, the Doge candle, some people call it Doge, some people call it the Doji candle, whatever it is, it's an indecision candle. Keep that in mind. And the opening and closing price will be the same. And you'll see this in different ways. Maybe, like you can see, this wick is in, this body is in the middle. Well, this really doesn't have any body. The body is just a line because it's the same price. So the body might be in the middle, might be on the bottom, it might be at the top, like this. So it's good to know these patterns and, well, I mean, these candles, and see sort of when they develop, okay, where are they developing? A lot of times, what do they signify? Maybe most of the time, a doji like this might signify a reversal in trend. Maybe a doji like this most of the time might signify a rejection of price. So it's good to know what these candles are, because you will eventually learn that these candles fall into candlestick formations, which fall into candlestick patterns. Like, for example, we spoke about the double bottom. We spoke about the double top. Now there's other things like evening star, bullish engulfing, which we'll get into these in one of the near videos. So it's good to know these candles, what they mean, what's the psychology behind them, behind their look, Is it directional? Is it indecision? What's going on? So that way you can piece the puzzle together, and it'll make more sense to you. Rather than just knowing the name of a candle, you know what's going on. Rather than just looking at candles on a chart, you know what's going on behind the price. It's not just you're looking at the price 1, 2, 3. You know, okay, there's more buyers than sellers. There's more sellers than buyers. The buyers tried to step in aggressively, but the sellers suppressed the price, and the buyers couldn't take control. So again, I hope this video was helpful to you, and I hope you stay for the next videos where we'll speak about, again, candlestick formations and many more things. Thanks again for watching.